Good evening, guys. Election edition. It is the nightly strategy podcast for November 3rd, 2020. So I was telling the guys in the warm-up, I'm like a raccoon watching shiny things as the votes come trickling in. Kansas is leaning towards Biden right now. That would be an interesting change. Kansas often flips national trends earlier than other states. It is a real turning point state. Independent thinkers out here. All right, so let's see what we have. Today, as expected, the RL10 rolled over and is just crossing the baby dragon as we speak. So the first couple elements of a supported spring crossing are in place. It almost got through the skin of the dragon here today. If we were looking at the descending PSAR, and we realize, hey, that PSAR's got to flip before the SSC occurs, these are where the dots are. Tomorrow, the PSAR dot is going to be right here at about 340 and a quarter, which would make this the trailing, or the 2-dot lag right here. And so that would indicate if you wanted an early entry in a SSC, then this would be the price point if you hit that, because you could actually, if this thing took off tomorrow and was going north, the play would be to enter here with a stop either, I would say, at the Bollinger Band mean or the bottom of the dragon. Take your pick. I would probably go with the Bollinger Band mean to get a larger position size on the first day. And then if that happened, you would see the PSAR right here flip down to really the belly of the RL10. So that PSAR could actually flip like the next day down to here. So if you took this as an entry, you would not be wrong to pick this as your wide swing stop right here, your risk box. At 326 and call it 327, and you'd have an entry at 342, which would give you about a $15 stop on 350. So that would be about something like a 5% risk box right here. And I would consider also just the Bollinger Band mean. So I could get a much tighter risk box here. So if I entered at 342, I might be interested in 334, which would be $8. Can that be right? 342. 15. Yeah, that'd be $8. Oh, no. I'm sorry. 338. That makes more sense. That didn't look like half the size. So that would be a $4 risk box instead of 15. Which means that if I went with this risk box, that position could be almost 4 times the size, because the size of the risk box is smaller. And then I only have to see +4 plus another 4, and then that would test it would test 350 or the 10-day high. There would be my 2 units of reward against 1 unit of risk. I would be inclined to do that and then just leave this in place. And then if this took off, if it broke through here, then I would pick up the trailing stop with about an $8 risk or $12 risk, I guess. And that way I could get a little bigger position size, and I still think it's justified on the basis of the Bollinger Band, being on the south side of the Bollinger Band mean for the risk. But you would not be wrong picking the wider stop. But I really think that's if you were going to get, if you wanted to get long on this, on a kind of the resolution of the tension of the election, then you want to enter in this space that's on this side of the dragon or the hump of the RL10 or the 10-day high. So I like getting in here on that descending period. So if we looked over at this move right here, that's the equivalent of watching these PSAR dots come down, right? And then you see the RL10 roll over, cross the baby dragon, enter the river, cross the spine, leave the dragon, enter the dragon, I should say, enter the river, depart the dragon, and then here's where that PSAR flips. So really, the entry would be the equivalent of this one right here. Is you would have gotten in here, and then for me, that stop just below the bottom of the dragon is one that I like. But what I teach you is this one down here to the PSAR, so it gives you twice the MMRB, but it gives you that extra buffer, and then your position size is only half the size if you're being aggressive. So this is me being aggressive. That one pays off pretty well on a retest of this one. But this is the idea here of entering on that second, that trailing PSAR entry that we talked about in the hybrid course. So just a couple different ways you get that done. So we're looking 30-day low, 10-day low, 10-day high, 30-day high, hump of the dragon, belly of the dragon. If this thing works to the upside, then this dragon is going to roll over and look like this. And that's, to me, the justification for having a stop right there on this entry. That would be the intermediate. So I would say you could have a stop here. You could have a stop at what will be the belly of the dragon, or you could just project it all the way down to the belly of the RL10. So there's an aggressive risk, a medium risk, and then the standard risk here. 3 different places. And again, your position size could be different on each and every one of those. Or same position size, but less dollars at risk. So that's what I want to say about that. All right, so today was a relief rally in the techs. Let's see what we got. All right, so we had the S&P at 1.77. You had DIA at 2.02. You had the Russell at 2.8. And you had you had Treasuries give back 0.6. So today was a vote for the equities, and it was a vote for the aggressive equities here in IWM, and then the large cap. The safety of the large caps was at a premium compared to the broader market. So that was a very favorable sign today. That was a rotation away from treasuries into equities. All right, so we had oil and tech up 1.7. You had Bill Ackman at hedge fund at 2%. You had Japan at 2.11. Had finance and consumer discretionary 2.2, clean energy at 3%. Then you had The triple tech's up 5 and 5.5%. And then working our way down from the top are the two that we have been touting as the emerging tech leaders, Tesla and Twitter, at Tesla at 5.8. So you may recall a couple days ago when it was at 380, almost $50 ago, I said that was a pretty good price. And Twitter has made its recovery after a almost 30% crushing to come in at 5.7. Virgin Galactic, 4.5. Goldman, Nvidia, and Boeing up 3.5 to 4. Caterpillar, Home Depot, and Nucor Steel. Caterpillar and Home Depot, I mean, they're just, for non-techs, they sure are crushing it. Then you got Nucor Steel and the materials. You got Cisco and Devon. Cisco and Tech and Devon and Energy. Microsoft and Procter. So the bellwethers are doing pretty well in here. The no-brainers are doing well. To the downside, things that are underperforming the S&P. So again, the S&P is at 1.77. So we've got materials and Mexico at minus 1.5, I should say. Healthcare at 1.46. Brazil at 1.3. The FANGs at 1.1. Wheat and precious at 0.9. Emerging markets and commercial real estate, SPG, and silver around 0.4. And you had energy and oil exploration lagging, which is what makes Devon Energy such an amazing trade today. That's a belief in the U.S. energy mid-cap there. Devon Energy is the big standout for me today at 2.23, whereas his sector was down 0.5%. So that's a real sign of outperformance up here in Devon Energy. So that's one to pay attention to tomorrow. Companies that underperformed, Wynn, Cliffs Natural Resources, which makes Nucor's performance so good, is that you have XLB was underperforming, but Nucor was great and Cliff was lagging. So the bloom may be off the lily in Cliff, and even U.S. Steel kind of lagged behind the broader market and the sector. Okay, just a quick look at a couple symbols for regular trades today. So this was a standard play in Tesla. I'm just piling on Tesla right now, trading at every chance I get. So here's where it closed yesterday, and here was the gap up and peak. There's the swing low at 2. I guess I should actually do it this way. Here was the swing low, where the RL10 rolled over, and then the RL10 rolled up again, and so now you have a higher low from 1 to 3, and buying in the pocket there at 4. If you had bought it at 5, you would be waiting for a breakout above the hump of the RL10. So that would be like 5 would be the emerging dragon. So 4 is is kata number 2, because you have a low and a higher low, and 5 would be the emerging dragon, because this entry here would be on the breakout above the RL10. I like 4 here because the sell-off didn't even get through the dragon or even test the PSAR, and price was crossing the VWAP again. So you had this surge, a quick sell-off, and then a resumption, and it crossed the VWAP, and off we go. I just go for it. And I wanted to get paid early, so I took the sniper exit here. And then if we're using the Wu Wei exit, remember, our stop would have been here anyway. And then when you have 1, 2, 3, 4, this is where you move that stop to anyhow. And then you leave it there until the Bollinger Band mean catches. So this accelerating the stop here to take it at the PSAR was not much anyway, and you probably you would either get the exit here or here anyhow. So that just seemed like splitting the difference and just get paid, so we make bank on this a little bit. Then it finds support at the Bollinger Band mean, gives me the RLXD, so we're back into it right here. And I want you to see that as really a kata 2, because you have a low, a higher low, a third higher low, or a second higher low, I should say. And then you have the RLXD, which just took out the previous peak of the RL10. Right? So that's kind of a no-brainer deal. There's your entry. This is your exit, your initial stop right here at the I put it at the where the PSAR flip would be, and really at the bottom of the RL10. So we don't even get the the Wu Wei exit adjustment until you get so here's our entry. So now you have 1, 2, 3, 4. This is really where the Wu Wei adjustment would be. So you have to come back to here. And then there's your Bollinger Band mean. But by this time, I really liked Tesla and everything was working. So I was quick to get a second position in when this broke above. And then when this one broke above the Z3 pinch, I just added the third one and just said, let's go for it. And then I had already committed by that time to this exit here on the sniper. So I took half the position at the sniper and then half at the Bollinger Band mean. And then when this bottomed out and the RL10 began to creep up, I just went ahead and re-entered with the usual stop in here, and this one paid off later in the day as well. So just sort of a standard practice on Tesla, which was among the very best performers of all of them, is far outperforming the other techs. And the techs weren't bad this morning either, so I felt that was a low-risk trade. The other one we did was to highlight was, I think it's Twitter. Yeah. So Twitter, kind of the same deal. Here's our stop. And this is a hybrid frog entry off that wrist box, which is about a 50-cent wrist box on a $40 stock, so maybe 1%. And it's crossing the VWAP and moving out, so why not? I thought hard about this second position here, but I had already had 2 positions in Tesla, and Twitter got smashed hard the other day, so I missed the chance to get in a second one here. By this time, so you have a pullback. It's still summer. That was attractive. This one had another pullback. It had turned to spring and then crossed the RLXD again, so I took the second position here. By this time, the your Wu Wei exit would be like right here, and that's in place until the Bollinger Band mean hits, and then you have this. and here. And this one just felt like we'd already had a third pullback. Here. So after this move, I decided to take half and make bank on a very nice move from here to there. And then the manager exit hit in the usual way. An orderly pullback. It still stayed above the VWAP here. So a nice orderly pullback here. And I felt like that was an SSC. And then the stop would be in the usual place here. And by this time, you're getting the Wu-Wei exit moves to about here, and it was collapsing anyhow. So I just took that exit. That pretty much bottom ticked, and it had another support here and crossed the RLXD, and then this thing got paid a little bit later as well. So just finding the movers and staying with them at the top of the stack and just enjoying the run up, and only cashing, not carrying them overnight, just taking advantage of the tactical opportunities. That was the play of the day, all day. There were some other opportunities late in the day, but getting well started was key. Okay, so let's look at the let's see, review. All right, we'll go to the daily report now. And let's see. All right, we remain bullish normal. We are now overbought on the 3-day, and then the 10-day NDX is starting to look healthy again too. ADX 19.8, bulls coming back into favor. The risk Z is still giving us a warning that this would be a logical place for it to bottom out and then to get better, but we want to see that happen. So this could be the upside move, but it could also be the downside move like it did here. So we'll be ready for either one of those plays. Okay. No signals in channeling an overreaction. Honeywell and Travelers did well today. The laggards, Intel, Boeing, and Salesforce. Oil and oil exploration suffered today. Only a few dojis. It was mostly directional and upside today, and dramatically fewer symbols that test well on the auto framer. Intel remains, a remarkable sell-off. I like Honeywell today. It was up 3.25 and broke out to all-time new highs. There's just nothing not to love about Honeywell. Let me see if we can find that one on the screen here. Yeah, nothing wrong with that one at all. And we should probably pay more attention to these sharp sell-offs in here, shouldn't we? These little cyclic moves, almost like a Chinese serpent dance here. And now it's completely broken out. And there's that. It has to get through that boundary, but man, if it gets above that yellow zone, man, it's off and running. So this will be an area of interest right here. If it can hold, if that's the risk, then the opportunity to me looks like this one, and free and clear, and off it goes. So I really like Honeywell right there. All right. Let's see what else we got. That's really about it. In the ETFs, only a couple dojis today. A 551W in consumer discretionary. Handful of good auto framers. And Japan had the big breakout today out of his tight trading ranges over 10 days, 1 month, 3 months, and 6 months. Auto framer, still plenty of things from the 10-day high that are looking pretty good. So I'd be looking at Intel. I'd be careful on treasuries though, because if this is a resumption, if this is a relief rally, that treasuries ought to be suffering a little bit. But I think McDonald's in Brazil offers some opportunities there, and I am always a fan of Apple and tech. Daily squeezes, only silver, and that's because of the magnitude of today's move. Let's see what else we see. There's Apple at 1.6, so actually in better shape than a lot of its peers. But you can't really use what this is telling us, you can't use a full daily range for that pop. You might have to use half a range in order to get a reasonable position size. Still being dominated by the winter in the Four Seasons. But McDonald's, Goldman, and Travelers have made the turn. I like this in Honeywell. The fact that it's in the winter means it still has a chance to go. And as we saw before, that if it can pop through that yellow zone from the March highs, then Honeywell is really in good shape to go. That's one that I think the 65-minute chart is probably pretty nice, because when you see those very distinct swing lows, that suggests that there's a really nice 60-minute trade that's available. So let's see if we can't just dial in and look at that. Yeah, sure enough, these turning points on the hourly charts are even more pronounced. So when you see things like get that out of the way. Yeah, these little turning points down in here, these supported spring crossings, like in this region, boy, is that ever nice. And then a Kata 2 up in here, and then a nice run up. And then this one really shows you the power of Kata 2 with a low and a higher low, and then a nice run up. So Honeywell looks to me like a nice short swing opportunity. That I have to start looking at that as a frog champion here at some point. Now that it's part of the Dow. Yep, Honeywell in great shape here, and you can see just how broad-based the gains were today. And the same thing over in the ETFs, materials, and then just about everything except treasuries. So that does not bode well for the treasuries. So I'd be I'm getting ready to start thinking about that core portfolio again, and when it's time to start feeding that back into the equity risk. Not yet, but soon. I'm liking industrials. And I should also say, it looks to me like Brazil may be in a position to recover from all that underperformance with today's really nice move. And tech is in the same boat. It's been underperforming, but I think it's time. So what you would see is if you start seeing this resurgence in XLK, then Apple is also sold off enough that that's going to be well positioned. Let's try to wait for that to come up. It's still not. Well, I'm going to be studying Apple later tonight too. Nice rebound and recovery here. It's crossed above the parabolic, and now it's getting ready to cross above the RL30 slope. This is still a market that is in neutral and ready to break out to the upside. Leg one and then leg two. Could also break down leg one and leg two. So perfect critical state by every measure. So no hurries and no worries. But I think we've got some clear leaders to look at here. In the tech pure plays, I think Tesla and Twitter. I'd be watching Apple as a value play and Honeywell as that new stealth member of the Dow is pushing all-time highs and is ready to break through some significant long-term resistance, and then it's free and clear to the upside. I think industrials are in good shape, better than the material sector right now. And energy has been so beaten down that I think that Devon Energy could be a very interesting play over the next couple of days. So we'll see how that goes. All right. Got to get back and watch those election returns as I get the steps in. That's everything I want to cover tonight. Keep your risk measured and your powder dry. I'm still purely tactical intraday for the next couple of days at least, I think. And then maybe even for this whole week. And then let the smoke clear over the weekend. I'll be ready for swing trades, I think, next week. All right. That's everything I got. Take good care, guys. We will see you in the chat room. And take good care.